Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's continue to talk about the euro currency. This is the daily time frame. As you can see that the targets that we have discussed in the beginning of the previous week has been achieved. So market has reached our target destination between the 124.80 and 125.30 area. That is an area that was created by weekly target 618 extension on the weekly time frame. So the normal price action suggests that market should respond on the reaching of the significant support, the reaching of this target, at least with the 3-8 retracement to the upward. Also, by the way, the 125 area is approximately the 786 minor support on the monthly time frame, and market currently stands right at this area. Also, you can see that market has hit the daily oversold area. So theoretically, we could count on the potential pullback, but currently we do not see any signs of it yet. So market hasn't even started this retracement. That's why it's difficult to predict what level it could reach, where it could stop, how fast it will be. Well, but existence of significant areas around 125 level suggests that this retracement probably could come. From that perspective, in current research we will discuss only the reasons for that, how it could be triggered by the low time frame patterns, and what destination, what the target of this retracement could be. Personally, I prefer to see the end of this retracement right here, because first of all, this is 618 target on the weekly time frame. That is the minor target, not the 100% extension, but just the 618. So that's why the retracement after that should not be too deep. Second, that price action overall on the monthly time frames, 3-4 months in a row, was a retracement of the pause in the long-term bear trend, and that move is just the re-establishing of that trend. When the trend just re-established, it's very difficult to expect some deeper retracement. From that perspective, all we know that when the market stands in the long-term bear trend and the solid trend, usually it retraces to the weekly period resistance one. This is right here. It's 127.28 area. Also take a look at that an area of the previous swing low. It's right here. Second moment is that the confluence resistance on the daily time frame is 127, 127.13. And finally, take a look at this red line. That is the MACD predictor indicator. It shows the level of, shows the trend. This is the derivative indicator from the simple MACD, and that indicator shows precise price when the MACD will show the line crossing. And it shows that trend will hold bearish till that moment. When the market will start to move a bit higher, then as you can see the nature of the MACD indicator, this line will drift lower to meet this price action. So we could say that probably the trend will hold bearish only till that area, and I prefer to see that daily trend will remain bearish. This is safer and gives the confidence and overall bearish environment that now stands on the euro currency. So that's the potential destination target of the retracement. At least the area, preferable area, is the end of the potential retracement market could reach. Well, how this retracement could start, and if it will start at all, of course. So what we see on the 4-hour time frame, we see the same levels as on the daily time frame. We also see that market has hit 1618 extension of that swing to the upside. And as was discussed on Friday, this ratio is very typical for the head and shoulders patterns. Although head and shoulders pattern is not quite welcome here because it suggests deeper retracement, and we do not expect it currently. But In general, the 1618 extension of the previous retracement is support line. That probably could be some kind of the free drive. Who knows, maybe market will show some pullback right to this confluence retracement resistance and then continue moving to the downside. That is also could happen. You can see that trend holds turns on the bullish side on the 4-hour time frame. Also take a look at that bar. This is the stop grabber pattern. Although I do not very like such kind of stop grabbers, I prefer to see it when they develops on the counter trend retracement. So for instance, market shows upward trend, stop grabber appear here, and the market accelerates further. Here is a bit different view, but after all, that is the stop grabber, and this pattern could suggest move to the upside and grabbing the stops above the previous highs right here. So at least we could see the move to the weekly pivot point. It's 126.21. That is the Fib resistance, and weekly pivot point 126.12. Well, on the hourly time frame, we see our butterfly pattern. You can see that market. First of all, you can see this nice bearish, bullish divergence that we also have discussed on Friday, and that is our pattern that we also discussed on Friday and said that probably market should continue to move a bit lower, since some significant target stands lower than this swing low, and that has happened. Market has hit 127 extension. Theoretically, it could proceed to the 1618. It's 124.55 area, and after that could start some pullback. Who knows? But in general, that is the reversal pattern, and we can't exclude that probably retracement could start by this pattern. So how we could trade this? Well, my personal opinion is that more safer to enter when the retracement will start. For instance, when the market, if market will show the retracement and start some acceleration to the upside, it's better to wait for the first thrusting move of this retracement and enter on some nearest dip to the 3-8 support, for instance, for this swing. That will be just safer, since we will get the sign of the retracement, the start of this retracement on our side. But currently, we do not have any signs for that. And if we will take into consideration the strong bearish trend on the daily time frame, on the monthly time frame, the entering on the retracement without any signs of it is not very safe game to play. Still, if you would like to know the aggressive way to enter with this retracement, you could stick with this butterfly. You could trade it as just harmonic pattern. For instance, if market will hit 1618 target or retest 127, you could try to enter by this pattern and trading it accordingly. How we trade usually the harmonic patterns is butterflies. This will, if you will be right, this will give you very good entry point, and your stop probably will not be too fast, since applying the harmonic numbers and applying the extensions will give you to place stop relatively tight. So the choice is up to you. So you could wait the starting of the retracement and later enter on some pullback, or you could try to take more risk and trade this harmonic pattern and hope that market will start retracement by this pattern. In this case, you will get the better entry point, but the greater probability of failure. So that's a current view on the market. Probably we should monitor price action in the beginning of the week for some time to understand will the retracement or not. If it will come, then we have just discussed the potential areas to watch for and how we could enter with this retracement on the long side of the market.